Hello, this is Mike Swanson, Wall Street Window, and I'm actually a guest today of David Skarica's. I'm visiting his place in the Bahamas, and we thought we'd do a little bit of a video session together because there's some crazy things that happen to be happening today, even though it's a Sunday, and that's the cryptocurrencies are rapidly declining. We were watching an hourly bar that was a red bar get bigger and bigger and bigger, and looks like a second crypto crash is happening. So how you doing today, Dave?
I'm pretty good. I'm better than anyone who's got a big position in cryptocurrencies.
It's funny because I went to a conference on the way down here in Florida, and it was a conference of newsletter writers, and there are a lot of people from Agora, and it was kind of funny because none of the people, for the most part, really seem to care about Bitcoin, even though, like James Altucher and some others had these massive Bitcoin promotions last year. And, there's Bitcoin stocks that were big over the past couple months. I bought that, I played that Riot one, and I bought a couple others. I actually lost a little bit of money in. And my feeling is I don't even really care about Bitcoin or what is going on with it. But there is a big cult following of crypto trading people. And we've been following some of these guys on their YouTube channels. But today, it's falling again. It topped in December and kind of crashed and bounced back up. And today, the one Ethereum, I'll load up this coin market cap, and people can see what I'm talking about here. But Bitcoin is down 6% today. Ethereum's down 19%. Ripple's down 14%. But they're not just down; they've broken support levels a couple of days ago and are down even more. That Riot stock broke through $10 the other week, and broke through $9, I think, on Thursday. So a lot of these Bitcoin blockchain stocks are falling too, just as much as these coins are. I mean, here's one. Neo is down 21%. Tether is actually up, but that's not supposed to move much in theory.
Sorry, 1 second. I just want to make sure I'm still. Oh yeah. Well, the thing about that Tether is the whole point of that coin is people move money into that when stuff like this is happening, because it's supposed to be linked to the dollar. So when all these other coins are down 20-30%, Tether actually may even trade at a premium to $1, because people will essentially sell it or buy that coin while they're selling the others and transfer into it. And like they'll do a transfer, so it's almost like they're not even selling. I think there's a way they're trying to getting around capital gains doing that too, because like you're just transferring from Bitcoin into Tether and you're not like technically selling. But I'm sure that the authorities will deal with that. And by the way, Ethereum was really interesting because it had this support. It held up the best actually during the smash in February, and it had the support at about $650, and it smashed through that today. It's $460, and they're saying the next support is 450, and where 450 comes from is if you look at, there's a tiny little pullback in November in Ethereum right before the blow off, and that pullback was stopped at about 450. So that's where that 450 comes from. So if it goes through 450, I think that 450 is actually very minor support too. That's just a minor pullback. Really, the next major like support in Ethereum is 200 to 300. And just I don't want to talk too much just about cryptos, but the reason that Ethereum is tanking is that it was like, if you go look at these ICOs, most of them raise money. Like you can send them money, right? You can send them a wire, do it from PayPal, from your bank account. But also a lot of them used Ethereum to raise money. So let's say Ethereum, when it was trading, just using an easy number at $1,000, you wanted to buy $10,000 of an ICO, like an IPO, you would just send them 10 Ethereum, right? And that would get it to you. Well, now that these ICOs are going to be regulated, they have to be registered securities, that's killing the demand for Ethereum because, people aren't going to send Ethereum for ICOs because, now they're regulated securities and a lot of these people aren't accredited. And, so the Ethereum is the one that's really, really getting hit. But look, what I want to show just quickly here, and I think this is way, way more important than, in terms of this sector, this is just way, way more important than, say, Ethereum falling in price. What I want to show is, and I'm going to share my screen now.
Well, I suppose you're not going to join the HODL revolution.
For those who don't know what it is, it's this really stupid term that you can see that at the front, at the top. I didn't notice that till now, which is kind of funny. They got that on the website where they do the the quotes of these things. So that's this term used by people who someone said something about hold, and he did a typo. So it's like huddle. So that's what they call it. They call it huddling. And it's funny, if you go on YouTube, you'll see these songs about huddling and stuff like that. And it's just kind of funny, right? Yeah, I'm not joining that revolution right now. But here's see, I have ad blocker on my computer. That's why I'm not seeing that ad that you're seeing, right? But actually, in a way, I wish I was, because I think that's hilarious, But I think where this is really important, I'm just going to get up the Ethereum chart on my computer for a second, is you go look at this chart. This is really a classic bubble, right? You've got this this thing, chopping along for years, and then it starts to take off in 2017, and then it completely blows off, right? What's really insane about this is as the beginning of 2017, Ethereum was under $10. A coin, and that, it went to 1,000, and that's 1 year, right? And the reason I think this is important is, for example, this is a chart of the NASDAQ in 2000, and you can see this blow off, and then it blew back down. And this is a chart of the Street.com Internet Index, because, of course, the Internet Index is where the bubble then. And notice, the similarity where you get this couple of years of this slow gain, and then it just blew off in 99, and this thing went from 50 to 800 and then crashed back down to 50 essentially by 2002. And that's what I think these coins are basically doing. That February was this kind of move like we saw in the first move in 2000, and now we're seeing the secondary move. And please note that the first good bounce, you can see in NASDAQ, for example, in its bubble, let me go back to the NASDAQ chart. You can see, well, it's tougher to, you can see this bounce here. On a chart, it looks small because of the huge bubble, but that was a good size bounce. The NASDAQ rallied really from about 3,000 to 4,000 when that happened. And, that was a 30% move, and it lasted a few months. Actually, you can see it better here. Here, you can see that was a good, and then note that there really wasn't any bounces of note in the second move lower into 2001. And unfortunately, that's kind of where, if we are in this kind of bubble bursting mode, that's kind of where we are. And if you go look at the tulips right now, this is a classic thing too. Again, notice in 1634, 1635, 1636, the tulips had this gradual increase. They essentially tripled in price over a course of 2 years. And then they went absolutely crazy and insane into early 1637, and then we're essentially zero by the end of 1637. So this is kind of, again, this is kind of a more colorful chart of the tulips, and this is kind of what happens. And this is actually here, this shows you here this chart behind the tulip price. This is enthusiasm, greed, delusion, new paradigm, and then a bull trap with this small bounce. And then fear, capitulation, despair, people just, return to the mean. Of course, the difference with tulips of all these other bubbles is you can't really do anything with tulips, right? So they kind of just never came back to where they were. And by the way, if we, we're looking at those .coms, you look at a stock like Amazon, it eventually based and now blew out those 2000 highs. But many of these stocks, pets.com, CMGI, theglobe.com, a lot of people probably don't even know what I'm talking about because they just disappeared and went to nothing. So what we did in my newsletter was I wanted a long short trade. Now, I own a stock still. Mike and I bought this stock. Actually, it's called Atlas Cloud. We both bought it in an IPO, like a private placement. And it's a Bitcoin miner. They have an operation in Washington. And the idea was they could actually produce Bitcoin, like mine for it at less than $1,000 a coin. So even now they can make money off that. So my idea was, well, if I do want to have exposure to this sector, and even if it's a bubble, if it goes higher, I want exposure to the best stock in the sector. The stock mining for a really cheap amount of money. It didn't have a huge market cap. Atlas Cloud only has about a $60-70 million market cap. Right now, the stock is halted because they're applying for their business change of business. They were a cloud computing company, and now they're turning into a Bitcoin miner. And then I'm going to be short something that's more of a value. So at around 270 a share, I shorted in the newsletter Hive. They mine for Ethereum, and they're in Scandinavia. And I thought they were just kind of jumping on the bandwagon as well. So, and it had nearly $1 billion market cap. So I'm like, well, I'm going to short the stock that has a nearly $1 billion market cap. And, this stock has fallen about 50% since we put the short recommendation on. And I'm going to be long this other stock that's only got like a $70 million market cap because, obviously like Hive is much more kind of overvalued. And, remember what we've seen in the Ethereum falling. Let me just get a 1-day chart. You can see Ethereum has fallen, from 577 to basically 470 in just the last day. So what essentially is going on is, this declines happened over the weekend. I expect Hive to really gap lower on Monday. So, so essentially you have a pair trade, and the idea would be like, okay, let's say you're long AKE, and that stock, that's Atlas Cloud, and that stock say goes to 80 cents to 40 cents in a bust, right? Falls 50%. But if Hive falls 70% or 80% and you're short this, you make money because you've lost 50% of your long, but you made 70 or 80% in your short, right? So, and the vice versa, the upside, I figured that Hive, if say Bitcoin blasted off to 50,000, didn't have the upside that AKE had. So even though in Hive I would lose money on the short, I'd make more money being long AKE. So this is like a classic kind of pair trade, right, in the sector that I did, right? So, but it just looks like, again, if you look at the .com bust, like I talked about these stocks that survive, what really happened, this is Riot Blockchain, the .com bust, the same thing happened, that all these junk companies, and I'm sorry, but these companies are junk, they basically busted and they just kept falling. Like you see one bounce here in February on Riot, but they basically busted with no bounce. Like if I could get, I'm just going to quickly look it up. I'm going to get the globe.com chart, I'm sure, that's a NASDAQ chart. I don't know if I can find a chart of this stock, but I'll have to look for it. But I'm sure if you could find a chart of this old globe.com, you'll see that like it blew off to like $100 in its IPO and essentially went straight down without even, a bounce,
Well, let me ask you this about Bitcoin. There's really two questions I want to ask you. I'll just ask them both at once. First of all, what would you say to someone that's invested in Bitcoin, what they should do now? And secondly, someone who isn't invested in Bitcoin, has no interest in it at all, that's a stock market person or even a gold investor that don't want to get into it, never want to get into it. What does it matter to them? Is there anything for us to learn from Bitcoin? Because I don't plan on buying it. So what does it matter to me?
The one thing about Bitcoin is I really don't believe that it's this store of value or it's like a digital gold. I don't believe that at all. Okay. Like the like I said, the investments I made on it, like the small investment in AKE was essentially a speculation, right? And let me state that, like, again, this AKE stock, it can still make money at the current price. Now, that doesn't mean that the stock price could go down because Bitcoin's gone down or whatever, right? But I just looked at it as a speculation, which is fine because it's same thing when we do junior mining stocks. Gold is a store of value, but a junior mining stock isn't. It's speculation, right? So when I look at it, I just think that with Bitcoin, just like those Street.com, this is the Street.com internet index, just like the internet stocks were extension of the bull market. The internet index went up 16 times from 1997 to 2000, where the NASDAQ, say, went up about 5 times. The Dow, I think, went up about 3 times. So there is an extension of the bubble. I think that Bitcoin is an extension of this cheap money stock market bubble we have. And what's interesting is that when Bitcoin, and I'm just going to get the chart here that I can show you this, when Bitcoin had this consolidation in 2014 and 2015, the stock market essentially had a 2-year period into 2016 where it did nothing. Bitcoin began to correct in early 2014. And you can see here, Bitcoin essentially started moving higher in 2016. But essentially from early 2014 to early 2016, a 2-year period, it did nothing. It just actually had this trading range of about roughly $200 to $300 to about $600-700. And it didn't really break that 2013 high of over $1,000 till 2017. But what's interesting is that 2014 to 2016 period, the stock market did nothing too. Now, it made some new highs along the way during 2014 and 2015, but essentially in a 2-year period at the same time where it did nothing. And, and Bitcoin kind of led the way. So whatever reason, even though it's a totally different market, it's not really associated with the stock market. But I think because it has to do with cheap money and the bull market that we've seen going back to 2009, it's kind of like the speculative extension of that. Bitcoin seems to be leading the stock market. And I think that's a real warning for stock investors, the fact that Bitcoin has started to bust. And just like when it started to bust in 2014, 2015, it led to the stock market correction of 2015, 2016. This bust could lead to something bad in the stock market. And what's really bad or negative, in my opinion, about the markets is if you go look at the Dow right now, and we were just looking at this chart recently, I'm just going to get like a 10-year chart and put it on a linear scale so you can really see it, is look how it just went parabolic and blew off. That is a very, very dangerous chart, and that has not happened too much in history. Gold did that in 1980. Stocks did that in 1929. The NASDAQ did that in 2000. So that really scares me that you've got this speculative bubble extension of markets, e.g. cryptocurrencies, blowing up right now, and at a time when the market just basically went through a parabolic curve. So I just think that's a real warning of stock investors, and I think you really got to be hedged right now. Now, most stock investors and stock bulls aren't really cryptocurrency type people, and they're just going to poo-poo it, right? They're going to say, oh, that's just a small sector. I meant nothing. But by the way, I saw those people do the same thing with the dot-coms in 2000, right? When the dot-coms basically had this first 50% bust, here in early 2000, really the stock market by the summer of 2000, like the stock market being the S&P 500, was back at its highs in March, and people just did not think it was a big deal, right? They didn't, but in the end, when the market fell nearly 50%, the stock market was the dot-coms were warning stock investors about the bad things that were about to happen in the stock market. They were just the most speculative version of it, and they busted first. And the last thing I'd like to show you, Mike, it's not just like these super speculative type industries. If you go look at these home building stocks back in you can see the parabolic blow off they had in 2005, 2006. Well, like in 2007, the home builders were about 50% off their all-time highs. Well, the stock market was at its all-time high. So again, the bust in home building stocks in 2006 and 2007 was warning stock investors about these really bad things that were, were to come, and they did.
Yeah, I think those are all very critical points. And, one thing about the Bitcoin or crypto trading world is, I started to follow and watch what these people were saying, in the second half of last year. And one theme that they had was that Bitcoin is a safe haven for the US dollar. It'll go up if there's a global collapse. Sort of the same sort of rhetoric. The key thing is a lot of the people trading crypto and Bitcoin did not like the stock market, or they said the stock market's risky, but Bitcoin isn't. And they didn't really think they were connected one way or the other. At the same time, stock market people kind of look down, or they were, and they still do, on Bitcoin people. They don't like Bitcoin themselves. Some people got mad when Bitcoin went up, and then Bitcoin people are bragging about their gains and so forth. But the stock market people think Bitcoin's, a fraud, it's junk, it's this, it's that, it's bad. But it's not. They don't see any connection between Bitcoin speculation and the stock market speculation, when I think, as you point out, there is a connection. And what I see is, when I first got into the markets in the late 90s, the internet stocks were the bubble sector. And I understood it was a speculative bubble sector, even though it was going up. But it was really an American phenomena of Americans becoming, and I was one of them, basically becoming internet day traders or whatever in the late 90s. And this was something happening in the United States, perhaps in Canada too. But it was a phenomenon of us really, you had to open up a brokerage account, put $5,000 into it. And I remember seeing an estimate on CNBC like in 2000 that there's something like 60,000 people day trading in the United States, and it was connected to the U.S. stock market. So when the internet bubble bust, it was a sign that the U.S. stock bull market was going into a bear market. And in the bubble and the internet busted in April 2000, but the rest of the stock market didn't roll over until the fall. Now, this time we're seeing a different bubble in this crypto stuff, which I think is similar to the internet bubble. Like, this crypto is the most speculative element of the financial markets. But what's different is that what we have had in this past couple of years is not just a U.S. stock market bull market, but a bull market all over the world, just about every financial market on the planet. And it's been fueled by low interest rates and junk bond creation to take advantage of the low interest rates, some of that money being used for stock buybacks. But the corporate bond market, the treasury bond market, is really the biggest bubble in history. You point out the home building stocks collapse. Well, that bull market peak, is a perfect example. The home builders collapsed. The stock market bull market rolled over almost a year later. So real estate was a speculation thing going on, at that fueled, helped to create that bull market. This time, it's really, I think, junk bond debt, government debt, the QE quantitative easing programs of the last couple of years. Those cycles are all now coming to an end. But the visible speculation is Bitcoin, crypto. And what's different from the internet stocks or even home building and real estate in the 15 years ago is that crypto, it was a global phenomena. People all over the world were opening up accounts to trade it. You only needed a credit card. You could buy $20 worth of it and become a trader instead of having to put $5,000 in a brokerage account. You could just do $20, whatever, $15. And there's actually more people trading crypto in Asia, and still are, than inside the United States. So to me, we've had a global bull market, not just a 90s US bull market or something, or a 2006 real estate bubble in the States, but a global financial bull market. And it makes kind of sense, for if that's a global bull market, there should be a global bubble in which every single individual on the planet has the ability to participate in. And so I think that's what crypto really is. And we've seen that bubble bust. Now it's, to me, it's when is the rest of the stuff going to roll over. It took May, June, July, August, September, about 6 months in 2000 for the U.S. stock market, the S&P to roll over after the NASDAQ bubble pop. The real estate prices topped in 2006. The U.S. stock market rolled over really October of 2007. So it took maybe 13 months, maybe 14, 15 months. So here, this is the pop of this bubble. How long is it going to take for this to affect the U.S. stock market? I'm not sure. But one thing about the Bitcoin bubble that is fascinating is that stock market bubble and those charts you showed, that really played out over a year. You know, that 1999 ride was a year long, and the bust on the way down was about a year too. This Bitcoin thing was just like over a couple months. You know, those crazy stock chart, Bitcoin or crypto, the coin charts you were showing me yesterday. These are things that went up over 60 days and went straight down. I've never seen, you know, it's quite amazing at the speed of the events that have taken place here. So what do you think all that means?
Well, again, like there's another chart that kind of shows all these bubbles next to each other, and the Bitcoin bubble had a way bigger like percentage increase. And I've never seen anything like this. Like a friend of ours, he bought something called Einsteinium. It's kind of a coin that does something with scientific research. I don't need to get into the details, but I'll actually let me go to CoinMarketCap and get this up. And I just want to use this as an example because I've never seen anything like this in my life where here's Einsteinium right here, right? You can see it's down 26% the last day. But look at this chart. This thing, I'm just going to get a year chart so you can really see it. This thing went, like he bought this at like a tenth of a penny or something, right? Or 100th of a penny. And this thing went to over $2 a share. Now it's back to 17 cents. But if you would have put $1,000 in this thing, you know, when it was 100th of a penny or whatever, you know, or you can see 5/10 of a penny, or, you know, so yeah, it was a tenth of a penny. That's right. You know, if you would have put money in that there, you would have made like $1 million on like a $1,000 investment, right? And we've never really seen anything like this. So I think that's why the bust is happening so quick, because these things all went up, you know, tens, if not hundreds of times in value, and that's totally unsustainable. And the thing about this is, you know, that you have a $276 billion market cap, and this was up to like 700 billion during, you know, the top, right? And the thing about it is, what do these things really do? Like Ethereum, which is now down to $46 billion market cap. I think it was like 100 billion at the top, over 100 billion. Ethereum still has a bigger market cap than Ford, one of the largest auto companies in the world. So, and what does it do to deserve a $40 billion market cap, right? It's just insane. And if we go look, you know, this is the thing about when you look at these charts. Like I can take any random coin. This is Litecoin, right? And you can see, I don't know why that chart. Yeah, you can see. Okay, yeah. Just taking a little. Okay, so you can see the big blow off and bust. These are all classic bubble charts. Like this is the South Sea bubble, right? Which is one of these famous bubbles back in the 18th century. This was a company that was doing overseas trading from Britain, right? And you can see the huge move from, you know, just over 100 to almost 1,000, and it crashed, you know, in just a few months or whatever. And this is the Mississippi scheme, another famous bubble that was like a French company that was doing, again, it said they had trading with Mississippi and Louisiana, you know, in the United States, right? Because that part of the United States was still with France at that point in the early 18th century. So you can see the same thing here. This thing goes from 50 cents to almost $10 and then crashes, you know, back down, you know, within a few months, back down to $3, $4, right? So these things all like spike up and crash. And you can see that the Bitcoin chart looks exactly like them. Like this is 1980 in gold. And notice 1980 gold is doing the thing I talked about, where the first bounce is really strong. And then after that, it just, when it grinds lower, It really goes lower with almost not any significant bounce or rally when people kind of start throwing in the towel. And it looks like we might be in that kind of phase for cryptocurrencies right now. So that's another thing too, is you look at these charts, it looks like all these bubbles. And another thing interesting about gold was that there was a bad bear market and recession from 1980 to 1982. And at that time, the commodities, we talked about housing being the bubble, .com being a bubble. Well, the bubble, cryptocurrencies maybe being the bubble offshoot of this bull market. Well, the bubble in the late 70s was commodities. And same thing, gold busted before the stock market. The markets did not peak until November of 1980. But that gold bust kind of was showing you that this deflation trade was coming and you were going to get this bad downturn. And that occurred until 1982, right? So that's kind of another warning here that probably these cryptocurrencies are leading the market, just like housing stocks did in 2005, 2006, just like .com stocks did in 2000, and just like gold did in 1980. So that's kind of interesting as well. And what's interesting is if you go look at the last 40 years, say, of market history, going back to the late 70s, there's only really been 3 multi-year bear markets: 2000, 2007, 1980. The 87 crash was only like a 3-month crash, right? So, and in all of those 3 multi-year bear markets that lasted, 1.5 to 2.5 years, there was this bubble sector that led the rest of the market lower.
Yeah, I think it's going to be very interesting to see how this plays out over the next couple months. I mean, it does look like those silver charts, the gold charts of 1980, that after they busted, it's just kind of going to do nothing for probably the rest of the year. Well, maybe we should wrap up this video, maybe do another one later on or something, or tomorrow or something.
Yeah, we're going to do some more videos, and I have a really good recording app on my phone, so we might just go out and also do just some podcasts. And just so you know, I hope if someone's not easily offended, these girls' boobs behind Mark were like being shown. It's a picture I have in my house, and just so you know, a woman actually drew that picture for me. So we call them the cigar girls. They have, they have a couple of cigars and stuff. Yeah.
I thought they're people that live on the island.
Yeah, they are. There's a woman on the island actually drew this for me. So just so you know, if someone's getting all angry, about the picture or something, yeah.
I was blocking the view there. So now they can see them.
Yeah, now you can see it. Yeah. So, I think it's kind of nice. I think it's a classy picture. I don't think it's done really seedy or anything. But anyhow, so. Yeah, but we'll do more interviews and whatever, right? So,
Well, we'll talk to everyone later on.
Okay, bye.